Welcome to Byte-Sized Tech, where we like to blend casual conversations with some hopefully insightful discussions on the latest in technology and gadgets. Today, we're diving deep into a space where the future of finance feels like it's being rewritten, like in real time. We're talking everything from how we pay for things to how companies go public and even how we bet on the big game.
Yeah, you hit the nail on the head. It really is fascinating to see this convergence of, tech and finance. There are some pretty intriguing implications, for consumers and businesses alike.
Okay, so to kick things off, let's talk about Gemini, the crypto exchange, and their potential IPO. Is this like a sign that crypto is finally entering the mainstream?
It very well could be a pivotal moment. If you think about it, Gemini going public could be a major signal to traditional investors that crypto is maturing and that it's ready for the big leagues, especially since the IPO market itself is, picking up steam. This move by Gemini carries even more weight.
So does this mean we're about to see a wave of crypto companies going public?
Not so fast. There's a pretty major obstacle in the way, and that's regulation. The rules surrounding crypto are still pretty hazy, to be honest, and it's making a lot of companies hesitant to take the leap. We're seeing startups spending inefficiently because of this uncertainty. It's kind of like trying to build a house without a blueprint.
I see what you mean. So is the Biden administration's stance on crypto part of the problem?
It definitely contributes. The lack of clear guidance coming out of Washington is creating this cloud of uncertainty. For the industry to really thrive in the long term, they need a clear and consistent regulatory environment. That's key.
Makes sense. Now let's talk about something that's been getting a lot of buzz, Bitcoin, and its role in the AI boom. We've all heard about the strain AI is putting on data centers and energy consumption. Where does Bitcoin fit into all of this?
It is interesting, right? Bitcoin mining gets a bad rap for its energy use, but it's actually incredibly adaptable. It can run on renewable energy sources, and it can even adjust its energy demands, based on market conditions.
So are you saying Bitcoin could actually be a solution to some of the energy challenges posed by AI?
It definitely has that potential. Think of it this way. Bitcoin miners could act like a sort of energy buffer. They could ramp up operations when renewable energy is abundant and scale back when it's scarce. And this flexibility could be incredibly valuable for managing the energy demands of AI, which, can be pretty volatile.
That's pretty mind-blowing. Now, speaking of mind-blowing, what about Bitcoin's potential within the AI economy itself? The Bitcoin Lightning Network, with its ability to handle micropayments quickly and cheaply, seems like it could play a key role.
Absolutely. The Lightning Network really could be a game changer. AI often depends on, microtransactions, think tiny payments for data access or processing power. The Lightning Network's speed and low cost make it perfect for that.
So we're not just talking about Bitcoin as a speculative asset anymore.
Exactly. The financial world is starting to see the bigger picture. We're seeing companies like Kesa developing tools for businesses to manage Bitcoin on their balance sheets. Public interest in Bitcoin ETFs is soaring. There are even Bitcoin-denominated life insurance policies now. And over 70 publicly traded companies now hold Bitcoin. That's a massive shift, towards mainstream acceptance.
Wait, Bitcoin life insurance? That's wild. It seems like the financial world is getting really creative with how they're using Bitcoin.
Yeah, it's not just early adopters anymore. The financial world is starting to get creative.
Okay, let's switch gears for a moment and talk about the Super Bowl. We all know it's a huge event for sports betting, and DraftKings is a major player. But with the rise of crypto betting and AI, are they feeling the pressure?
Those are definitely factors, but right now their biggest concern is actually the illegal betting market. These unregulated operators don't play by the same rules, and it makes it really tough for legitimate companies like DraftKings to compete.
So how is DraftKings responding to this challenge?
They're betting on their superior product and customer experience. They're focused on creating a user-friendly platform with a wide variety of betting options and providing excellent customer service to build loyalty.
That makes sense. So they're focused on playing by the rules and offering a great experience. But what about the Super Bowl itself? Is DraftKings expecting another record-breaking year for betting activity?
Absolutely. The increasing popularity of prop bets is a big driver. These are bets on specific events within a game, like how many yards a quarterback will throw. They're really changing the game for sportsbooks.
Prop bets definitely add another layer of excitement for viewers. But how do those bets impact DraftKings?
Prop bets change the risk profile for sportsbooks. Think about it. The outcome depends on very specific actions, not just the final score. This unpredictability makes things more exciting for bettors, but it also requires more sophisticated risk management.
So more excitement for viewers, but more complexity for DraftKings. It's a fascinating dynamic. Now, I had to ask, Is Taylor Swift's presence at NFL games having an impact on betting?
It's hard to measure the direct impact, but anything that increases viewership is good news for sports betting. More eyeballs on the game equals more potential bettors.
You've got a point. And you know what else I've noticed? It seems like more women are getting into sports betting these days.
That's a trend DraftKings is watching closely. Traditionally, sports betting has been a male-dominated market. Expanding their reach among female sports fans represents a huge growth opportunity.
It's great to see the industry becoming more inclusive. Now let's talk about DraftKings' use of AI. Is it just hype, or are they really using it to improve their platform?
They're definitely putting AI to work in some pretty impressive ways. Think customer service chatbots, personalized betting experiences, and even streamlining back-end operations. It's not just a marketing gimmick. They're using AI to enhance efficiency and user experience.
Wow, so it's the real deal. How much of their operation is actually using AI?
You might be surprised to learn that 15% of DraftKings' codebase already uses AI elements. This isn't some futuristic vision. It's happening right now.
15%. That's way more than I expected. So is AI going to completely replace human decision-making at DraftKings?
Not entirely. It's more about augmenting human capabilities. AI can help make processes more efficient, provide deeper insights, and create a more personalized experience for users. But human expertise is still essential, especially when it comes to risk management and strategic decision-making.
So AI is a tool that can help them do things better and faster, but it won't replace humans altogether. That makes sense. Okay, let's move on to a topic that's probably on a lot of our listeners' minds. Buy now, pay later services.
Ah, yes, BNPL, the payment option that's changing how we shop.
Exactly. Specifically, I want to talk about Affirm. Are they changing how we spend money, or is it just a passing fad?
Affirm is experiencing explosive growth, especially in areas like travel, electronics, and general merchandise. You can now find them in almost 80% of U.S. online stores.
80%. That's a huge chunk of the market. But I've heard that using buy now, pay later services like Affirm can hurt your credit score. Is that true?
That's a common misconception. A recent study actually found that using BNPL responsibly can improve credit scores. Unlike credit cards, Affirm doesn't have late fees or compounding interest, which makes it easier to manage payments.
So it's all about responsible use, like with any financial tool.
Absolutely. And Affirm is really committed to transparency. They want their customers to fully understand the terms of the service. This is particularly important as regulators start to scrutinize the BNPL industry.
Transparency is definitely key. But what about Affirm's use of AI? Are they using it beyond just the financial side of things?
They are. One impressive example is their customer service chatbot. During peak shopping times, this chatbot handled a whopping 20,000 customer inquiries per day.
20,000. That's incredible, but what happens if someone really needs to talk to a real person?
They can absolutely request to speak with a representative. Affirm understands that while AI can enhance the customer experience, it shouldn't replace human interaction entirely.
That's good to hear. So AI is handling those routine questions, freeing up human agents to deal with more complex issues.
Exactly. And they're using AI in another interesting way to monitor their online brand presence. This helps ensure that all information about their services is accurate and compliant with advertising regulations.
It's like having a digital watchdog, making sure everything's on the up and up. Pretty smart. It seems like AI is becoming essential for businesses in pretty much every industry.
You're right. It's not just about automating tasks, it's about gaining insights, improving efficiency, and ultimately creating a better experience for everyone involved.
All right, we've covered a lot of ground today, from crypto IPOs to AI-powered sports betting and the rise of buy now, pay later. It's fascinating to see how the lines between tech and finance are blurring.
I agree. These trends are only going to accelerate in the coming years. It's a really exciting time to be following these developments.
Well, on that note, we'll have to wrap up this part of our deep dive.
Welcome back to Byte-Sized Tech, where we are continuing our deep dive into this fascinating world where tech and finance, they just keep colliding.
Picking up right where we left off with BNPL, it seems like Affirm is everywhere these days. But are they the only player in the game? What's the competitive landscape looking like?
Oh, it's definitely getting crowded. With companies like Klarna Afterpay and PayPal, all wanting a slice of that BNPL pie.
So it's a bit of a Wild West out there right now.
In a way, yes. And that's actually what makes it so interesting to watch. We're seeing a ton of innovation as companies try to figure out what works best, for both consumers and merchants.
Speaking of innovation, how is Affirm using technology to stay ahead? We talked about their AI chatbot, but are they doing anything else noteworthy?
They're doing some really cool things with data analytics. By analyzing, transaction data, they can actually give merchants really valuable insights into customer behavior. And this helps merchants make smarter decisions about things like pricing, promotions, and inventory.
So it's not just about helping people buy things, but also helping businesses sell things more effectively.
Exactly. A firm wants to be seen as a strategic partner for merchants, not just, a payment processor. And that's a smart move in such a competitive market.
That makes sense.
Mm.
Now let's shift gears a bit to another area where tech is disrupting finance, investing. We talked about Bitcoin, but what about trends like robo-advisors and fractional shares? Are those gaining any traction?
Absolutely. Robo-advisors, the ones that use algorithms to provide automated investment advice have become really popular, especially among younger investors who are, comfortable with technology and looking for low-cost options.
Well, it's like having a personal financial advisor in your pocket.
You could say that, but it's important to remember that robo-advisors aren't a one-size-fits-all solution. They're best for investors with, relatively simple financial goals and a long-term investment horizon.
Got it. What about fractional shares? I've heard that those are making it easier for people to invest in companies that, might have been out of reach before because of high share prices.
That's right. Fractional shares let you buy, portions of a share instead of the whole thing. This makes it possible to invest in companies with those high share prices like Amazon or Google, even if you don't have a ton of money to invest.
So it's kind of like democratizing investing, making it accessible to more people.
Exactly. Fractional shares are opening up the stock market to people, regardless of their income level.
I agree.
That's a really positive development.
I agree. Now let's bring it back to the intersection of tech and finance with a topic that's been making headlines. The metaverse. Is there any real money to be made in this virtual world, or is it just hype?
That's the million-dollar question, isn't it? The metaverse is still in its early stages, but there's a lot of potential there for businesses to make money.
Like how? Give me some examples.
Well, we're already seeing companies selling things like virtual real estate, digital fashion, even concert tickets in the metaverse. And as more people spend time in these virtual worlds, we can expect, even more innovative ways to monetize them.
So it's kind of like the early days of the internet. People weren't sure how it would all play out, but then e-commerce took off, and now it's a trillion-dollar industry.
Exactly. The metaverse has the potential to be just as transformative as the internet. It's going to create new industries, new jobs, new ways for people to interact and do business.
It's mind-boggling to think about all the possibilities. But let's be realistic. Are there any risks or downsides to the metaverse that we should be aware of?
Of course, just like with any new technology, one of the biggest concerns is privacy. These virtual worlds are going to collect a ton of data about us, about our behaviors and preferences. It's crucial to make sure that this data is protected and used responsibly.
That's a good point. We've seen how personal data can be misused online.
Exactly. And then there's the issue of security. As more transactions and interactions happen in the metaverse, it's going to be a bigger target for hackers and cybercriminals.
So we need to be thinking about cybersecurity from the very beginning as the metaverse, as it develops.
Absolutely. We can't just assume that the same security measures that work in the physical world will be enough in the virtual world. We need new tools and strategies to protect users and their data.
It sounds like there's a lot to consider as the metaverse takes shape. It's exciting, but we need to proceed with caution.
I agree. It's important to be both enthusiastic and realistic about the metaverse. It has amazing potential, but we need to be aware of the risks and work to minimize them.
All right, stepping back from the metaverse for a moment, let's talk about something a bit more down to earth. Financial literacy. With all these new technologies and investment options, it seems like it's more important than ever for people to understand, personal finance.
You're absolutely right. Financial literacy is crucial in today's world, especially with the rise of cryptocurrencies, online trading, and buy now, pay later services. It's easier than ever to get into financial trouble if you don't understand the basics of budgeting, saving, investing, and managing debt.
So how do we improve financial literacy? Is it something that should be taught in schools?
I think it's essential to start teaching financial literacy young, as part of the regular curriculum. But it's also important for adults to keep learning and stay up to date. There are tons of resources available online these days, from personal finance blogs and podcasts to online courses and workshops.
It sounds like there's no excuse for not being financially savvy these days.
Exactly. Knowledge is power, especially when it comes to your finances. The more you know, the better equipped you'll be to make smart decisions and reach your financial goals.
I couldn't agree more.
Okay.
Before we move on, I want to touch on one more trend that's been catching my eye. The rise of ethical investing. Is this just a fad or is it something that's here to stay?
Ethical investing, also known as sustainable investing or impact investing, is definitely gaining momentum. More and more investors want to align their investments with their values, whether that's supporting companies that are, environmentally friendly, socially responsible, or governed ethically.
So it's not just about making money. It's about making money in a way that feels good and makes a positive impact.
Exactly. And the good news is that ethical investing isn't a niche market anymore. There are now a wide variety of investment options available, from mutual funds and ETFs to individual stocks and bonds that cater to investors who want to make a difference with their money.
That's encouraging.
Oh.
It seems like the financial world is becoming more aware of its impact on society and the environment.
It is, and that's a really positive change. We're
Huh.
seeing a shift from a purely profit-driven mindset to a more holistic approach that considers, environmental, social, and governance factors. It's about building a more sustainable and equitable financial system for everyone.
Okay, on that inspiring note, we're going to have to wrap up part 2 of our deep dive.
But don't worry, we'll be back soon with even more insights into the evolving landscape of tech and finance.
Welcome back to Byte-Sized Tech. We're wrapping up our deep dive into this fascinating world where tech and finance are, like they're colliding.
It really has been quite a journey exploring how technology is, like reshaping how we spend, invest, and even just think about money.
You're right. We've covered everything from crypto IPOs and AI-powered betting to the rise of buy now, pay later services and the metaverse. But before we wrap up, I want to get your take on something that's been on my mind. The future of work. With all this automation and AI, are robots going to, steal all our jobs?
That's a question a lot of people are asking, and it's a valid concern, but I think it's more nuanced than that. AI and automation will definitely change the nature of work, but they'll also create new opportunities.
So it's not necessarily about jobs, disappearing, but rather jobs transforming.
Exactly. Think of it this way. Some tasks will definitely become automated, and that frees up humans to focus on more, creative, strategic, and interpersonal aspects of their work. The jobs of the future will probably require a different skill set.
Okay, so what skills should people be focusing on to stay ahead of the curve?
Skills like critical thinking, problem-solving, creativity, communication, and collaboration will be more important than ever. These are skills that are really hard for machines to replicate.
So it's not just about learning to code, but about honing those uniquely human abilities.
Precisely. And I think lifelong learning is going to be absolutely essential. The pace of change is only accelerating, so we all need to be adaptable and, constantly upgrading our skills.
It's not about getting a degree and just coasting. It's about being a continuous learner.
Absolutely. And, companies have a role to play here, too. They need to invest in training and development programs to help their employees stay relevant in such a rapidly changing job market.
It's a win-win, right? Employees gain the skills they need to succeed, and companies get a more, productive and adaptable workforce. Now let's get a bit more personal. How do you think all these tech and finance trends will impact our everyday lives in the coming years?
That's a great question. I think we'll see a lot more personalization and convenience in our, financial lives. Imagine managing all your finances, banking, investing, budgeting, payments through a single AI-powered platform.
It's like having a personal financial assistant right at our fingertips. That's both amazing and a little bit daunting.
I agree. And we'll probably see more integration of technology into our physical spaces. Think smart homes that track your spending habits and adjust your budget, or wearable devices that authenticate payments and offer personalized financial advice.
It's almost like having a financial advisor built into our homes and even our bodies. That sounds incredibly convenient, but also raises some privacy concerns.
You bring up a very important point. We really do need to consider the ethical implications of these technologies and make sure they're being used responsibly and ethically.
Absolutely. Privacy and security should be top priorities as these technologies,
Yeah.
as they evolve.
Couldn't agree more. We need to have open and honest conversations about technology's role in our lives and how it shapes our world. What are the values we want to embed in these technologies? What kind of future do we want to create?
Those are big questions, but they're important ones to ask. We need to be intentional about how we develop and use these technologies to create a future that benefits everyone.
Well said. On that note, I think it's time to wrap up our deep dive.
It has been an incredible journey exploring the intersection of tech and finance. These two worlds are becoming, increasingly interconnected.
Yeah.
And it's going to be so fascinating to see what the future holds.
I completely agree. It's an exciting time to be witnessing this transformation.
Thanks for tuning in to Byte-Sized Tech. If you enjoyed our deep dive, be sure to like, comment, share, and subscribe for more fun tech discussions.